morning, everyone. Today is the 17th day of July 2021. We'll be discussing accounting for agricultural and biological assets in line with the requirement of IAS 41. As we all know that agriculture is important to the global economy. Agriculture is what more or less gives room for what we rely on in making living, in surviving on this planet, and in also providing resources and materials that are used for further development, including infrastructural development. Therefore, it's of importance and essence that though the contribution of agriculture varies from country to country, but it's critical for us to understand that it's of greater importance. And the reason why we have a separate standard for agriculture and biological assets is because of one or two diversity or complexities it has with respect to accounting treatments. Because the nature of it is much more characterized by differences in the nature and in the development of such an asset, okay? As it relates to much more of living plants and animals. And therefore, we cannot extensively equate it to any other non-living items that have given rise to various accounting methodologies. And that's why it is critical for us to have this in mind. IAS 41 has contributed to international harmonization of accounting standards, okay, across the globe, because agriculture in particular was characterized by great diversity in accounting treatments in different countries. Now, for instance, you all know that cow is one of the mainstay of providing meat for consumption and for other uses. And where cow has been accounted for as inventory in some countries like Ireland, and but in some other countries, like in the UK, is taken as non-current assets, okay? And we're going to see that as we move on. And what we have tried to do is to look at the position of IAS 41 that has tends to bridge the gap between various standards in order to provide better framework for understanding the treatment to be accorded to agricultural produce and vis-a-vis biological items. Now, we'll start first with the objective of this standard. Okay, the objective of the standard is to prescribe the accounting treatment and disclosure related to agricultural activities. And we need to bear this in mind. What constitutes agricultural activities? The standard makes us understand that agricultural activity can be viewed in three perspectives. Okay, and one of those perspectives is to look at biological assets with the exclusion of bearer plants. And we're going to know what biological assets are and what bearer plants are, and why bearer plant is excluded from the concept of viewing it as a biological asset for the sole treatment under IAS 41. Second aspect of the agricultural activity borders on agricultural produce at the point of harvest. Okay. How do we identify agricultural produce, which are the harvested biological assets? And again, whether government grants can be accounted for in line with the requirement of IAS 41. If you remember, under IAS 20, we said government grant is excluded from the provision of IAS 20 for agricultural activities, all because it has been taken care of based on its peculiarities under IAS 41, which we are going to discuss as we move on. Okay, and that's that. And later on, we also understand that the standard does not necessarily apply to the following items. The standard does not apply to land related to agricultural activities. Such land may be the farmland, may be game reserve, may be zoo that is provided. Why? Is because these are being accounted for in line with the substance of those transactions, whether under IAS 16, which is property, plant, and equipment, or under IAS 40, which is investment property. Likewise, bearers plants related to agricultural activity is excluded from the standard because if you remember in our discussion under IAS 16, if you can go back to the video, you'll find out that one of those key things we consider as an item of property, plant, and equipment is burial plant. And it's because by nature, it is an asset that is deployed in production of further goods or in the processing of items for final produce. And that is to be taken care of under IAS 16. Likewise, we talk about government grants related to burial plants. Government grant related to burial plants will not be considered as government grant related to agricultural activities under IAS 41, all because burial plant itself is under the scope of IAS 16, and therefore the government grant relating to burial plants will be in tandem with the government grant accounting under IAS 20, which we discussed earlier. You can go back to the YouTube video also to watch that. Okay, we also talked about intangible assets related to agricultural activities. Those are scoped out of IAS 40, IAS 41, rather, they belong to IAS 38 under the general concept and principle of intangible assets. We also border on right of use of assets from a lease of land related to agricultural activity. And such right of use will be within the framework of IFRS 16, which we have also discussed, which you could go back to the video to watch on how do we account for IFRS 16 from the perspective of the lessee using a single economic model under that standard. Okay, and those are the things we need to take note of. Okay, now I want us to share what is our expectation as I go on into practical demonstration of this section. What are your expectations? What have you come across in the past with respect to agricultural items or activities, which we are about discussing, and especially with respect to biological assets? Okay. Any question? Not question now, but any contribution out of your expectation?
Good morning, everyone.
Good morning.
Well, I would like to say this. For me, I have next to little to nothing knowledge of this standard. I've not come across before. I've not had reason to study it any time. So I will expect it to be well detailed, because something I don't understand actually. So I want a detailed lecture that will take it from A to Z. So that's what I'm expecting, because it's a standard that I have no knowledge about at all. As I said, I've not had any reason to study it for now. So that's what I will say.
Thank you very much. Who else?
Good morning, sir. Good morning, everyone.
Good morning, ma'am.
Yes, sir. I'm even happy the time this topic is coming up. Currently, I have a client is into agriculture, and I've been trying to read about it and to study, to know how to treat some of the items. But my expectation this morning is mainly on inventory valuation of agricultural products. Then when they are giving grants, how to treat the treatment of grants given by government to people that are into agriculture. So I have a great expectation, and other aspects, other disclosures and the recognitions of their income. So my expectation is so high. Thank you.
Okay, thank you very much. Who else? Akin Falayan?
Yes, good morning, everybody. For me, the standard is, I've just had the name before. I've never been in any session where it was discussed. So I'll look forward to having a good understanding of everything we're going to discuss today. I'm not sure I've even read any piece of it before. So it's going to be a good session for me to acquire practical knowledge and application from the class.
Okay, thank you very much. Now, okay, now there's one key thing I would also like us to understand, okay, from what Madam Grace said. You want to know how they value agricultural produce with respect to inventory. And we're going to draw a thin line between three things, okay, between biological assets, agricultural produce, and inventory, because there's a thin line in between or across the three items, and we have to look at it carefully, okay? And that's, at the end of the day, we'll be able to give more credence to what we want to discuss. Okay, now let's look at this. The standard is set to apply to agricultural produce, which are the harvested biological assets in that case. Okay, and I will explain what biological assets is. And agricultural produce only come up at the point of harvest. Okay, and anything thereafter is inventory. Now, what do I want to show us? Okay, I'll show us this from one of the keynotes. Probably I'll bring it down here. Let me copy it from my model I've more or less built up for you guys. Okay. I've tried to put this together as a way of trying to explain some basic concepts. Okay. Okay, now we want to look at the thin line between biological assets, agricultural produce, and inventory. Okay, now one leads to one. Let me try and put up a diagram. Now, if this is biological assets, it gets to a point, it becomes agricultural produce, and thereby metamorphose into inventories. Now, what are biological assets? Biological assets are purely living plants and living animals. Now, and this, at this point, they are at the point of nurture, at the point of rearing, at the point of production. But once they get to where harvest arose, they metamorphose into being an agricultural produce. and immediately after harvest, period thereafter, harvest, they metamorphose and become inventories. Now, let me give you a practical example. That's why I put this up. When you have a farmland, your sheep or sheep, as the case may be, they are biological assets because one, you are nurturing them, you are rearing them to produce other sheep. Okay. Now, the day they get to a level where you say, okay, this sheep is now something that I will now make available for sale because it has gotten to the level I wanted to sell it, or it has gotten to the level I need to kill it in order to take some things out of it, which is at the point of harvest. What you realize from it, whether as a sheep that is now taken away for sale, or has been grouped for sale purposes, or has been warehoused somewhere for killing, in order to extract the meat, to extract the wool, extract all sorts of things. At that point, what you decide to do becomes an agricultural produce. And what are the things that come up from the sheep as agricultural produce? One essential thing there is wool that is used to do cotton, clothes, and some other things, clothing. Therefore, the wool that is taken off the sheep is an agricultural produce because it has already been harvested or at the point of harvest. Now, if it's like cow, okay, the milk you take from it becomes agricultural produce at the point of extracting the milk, even though the cow still continue to become biological assets. If it's pig, the carcass of pig is simply, once you have killed the pig, you have killed it for other uses, whether for consumption or otherwise. At that point of killing, that is a carcass, which is the lifeless body of the animal, including its various parts. At that point in time, it becomes agricultural produce. Tree in a plantation forest is a biological asset, but immediately you fell the trees, before they becomes a log, timber, lumber, at that point of felling is at the point of harvest, it becomes agricultural produce. Now, what is the thin line between agricultural produce and inventory? The thin line between the two is that at the point of harvest, it is an agricultural produce. And being an agricultural produce is always for a very short period of time, all because immediately after the harvest, it becomes inventory, such as your wool, you use it to do rug, carpets, yarn. Okay, I'll show you an example of the wool and yarn, how it is. I try to bring it together so that we can have a better understanding in practical sense. This is what you take off the sheep. Can you see it? This is what you take off the sheep. These are the wool. Okay. Now, thereafter, the wool can now turn to inventory where you have more or less further processed it to an item that can be sold outrightly in that manner. And in that case, it has turned to rugs and the likes. Now, if you come back, let's look at trees. When you go to the forest, you have a lot of trees. And once you fell the tree on ground, it becomes agricultural produce. At the time you now prepare to be a log, timber, which is now available for use for furniture and for other infrastructural purposes, or even turning into production for papers, tissues, and etc. At that point, it becomes inventory. Now let's look at it here again.
Hello, sir, Mr. Muiwa, sorry.
Yes, ma'am.
Yeah, please, I want you to come down to the level of what we have now, because most Nigerians now are into planting of vegetables, tomato, pepper, then poultry,
yes,
things like that. I want you to.
We are coming to that. We are coming to that.
As an example.
We are coming to that. Yeah.
All right.
Okay. This is a timber. These are logs. And it has been turned to lumber where you can now use it for building, furniture, and etc. Okay, now let's look at the one of pig. Okay. Now, before pig, let's look at the milk. You know, milk later can be turned to milk for immediate consumption. The milk obtained from the cow is an agricultural produce. Once it has now been available for sale, or for further production into milk consumable directly or cheeses, therefore it becomes inventory. These are examples of cheeses. The same thing goes for pig when it becomes carcass. At this point, it is an agricultural produce. Why? Because it's still going to go for further production or at least for outright sale. Okay. Thereafter, it becomes inventory when it becomes things like sausages, arms, and etc. Now let's now pick a practical example of what we have talked about, which means we are talking about arable production. Now, arable production is much more straightforward, all because arable crops, which means at the point of planting, up to the point of germination, but prior to the point of harvest, they are known as biological assets. When you go to your farm, you could see your vegetable, tomato, pepper, and etc. They are purely biological assets. When you go to your poultry, you'll see your hens developing, growing. They are biological what? Assets. Now, the arable crops become agricultural produce immediately you harvest them. At the point of harvesting, they become agricultural produce. Thereafter, they immediately become inventory. Their own lifespan is short, very short as agricultural produce, because immediately they'll be available for sale. And at that point, when it is a period after harvest, they now made themselves available for sale, which meets the definition of inventory or for further use in production. Now, that is inventory. Let me pick poultry, for example, for chicken. The chicken themselves remain biological assets. At a point, they lay eggs. At the point they lay eggs, the eggs they lay are considered inventory. The chicken, once it's still left in the farm for the purpose of laying eggs, will still retain biological asset class. But immediately they evacuate the chicken and they say, okay, this chicken has used its life of laying eggs. Therefore, it is now meant for us to take it out for the purpose of selling or use for other purposes. At the point of separating it out of other biological assets, for the sole purpose of production, consumption, or for sale will immediately be classified or categorized as agricultural produce. But immediately is now available for the purpose to which it's intended for, which means it has now been placed in the warehouse where it will be sold to major distributors or to retailers, to wholesalers, or it is now meant for killing, or it has been killed for the sole purpose of using to do more or less frozen chicken and some other things. At that point, it becomes inventory. And that is that. Does that make better clarification of the differences between biological assets, agricultural produce, and inventories?
Yes, sir.
Yes, it's clear, sir.
Okay. Now, what we are going to do at this point is to go back to our definitions. But before then, I have a question. And what is my question? Okay. Now, I'm going to assume you work in an agri sector. And I want you to answer this question from your own perspective. If you work in agriculture, or if agriculture is important in your country as it is in Nigeria today, you may like to investigate the accounting treatment of items such as forestry activity, livestock activity in your country. Are there differences within your own country, and how do these practices compare with other countries? What we are saying is that you have forest activities, probably like game reserves and some other things like that, that constitute agricultural activity, or you have livestock activity. Like if you go to animal farms in our or your state, you see a more industrial farmland or farm park for livestock, chickens and etc. Therefore, the question then is, are there differences to which there have been accounting treatment, if you have any idea, in Nigeria as opposed to any other country? And how do the practices compare with those countries, including yours? What is your view about that? If you have idea, say it. If not, we can move on.
I think there will always be differences, though I don't have much idea. Because it all depends on the knowledge of those who prepare the accounts, their knowledge about this IAS 41.
Okay, let's look at Nigerian perspective now. Look at Nigerian. Let's forget about other countries. Let's look at Nigeria. What is our perspective to accounting for this?
No, I think from I think most of the cultural or industries that one has come across, the big ones, since one has not actually had the ability to work in them, one will not have idea. But the small ones that are around, they keep incomplete records. So I don't think they are into, they make use of IAS 41 per se. So I think there will be a lot of differences. And
how do you believe they don't use 41?
Because I know very well that based on the question you asked, whether there are differences or whether they have been naturally, people, the knowledge of this standard IAS 41 is scanty. That's one. But I know that big organizations that are very well industrialized using them, and they have the capacity to employ skilled accountants, definitely they will make use, they will keep a paper record, and it will be comparable to what is obtainable in other countries. But for others, I don't think they will do that.
Okay, probably you thought you believe so, but I think probably because you are not used to that industry, that's why you might have reached such conclusion, which I don't think is absolutely correct in that manner. Okay. Now let's look at this. The position taken here is very simple. It is quite difficult to apply traditional accounting method to agricultural activities, which explains why agriculture is excluded from many IFRS standards. Now, when and how do you account for critical events associated with biological transformation? And biological transformation entails growth, procreation, production, and degeneration. Okay, I think we understand this terminology. Growth means over time, it starts to get nurtured to a point of maturity. Procreation means giving birth to new ones. Production means it's turned into agricultural produce, and degenerate more or less means that over time, as a result of procreation, as a result of production, like laying eggs, growth, and some other things, you start to lose value in terms of nutrition, size, weight, and some other things like that. Now, what we are saying is that when and how do you account for critical events associated with biological transformation, which alter the substance of biological assets, is one of those critical factors that brings about this need to have a dedicated standard. Another thing borders on how do you classify in your financial statement. Will I classify biological assets? Let me say living plants or living animal. How do I show it in my financial statements in real sense? Am I going to treat it as an item of property, plant, and equipment, or intangible, or inventory, and some other things? You know, there's a thin line across the border, and therefore, that's why we have this standard. Another thing that more or less is of essence is that the nature of the management of agricultural activity also causes problems. Okay, for example, how do you determine unit of measurements? Okay, and the issue of biological assets, when does it transform into agricultural produce? Okay, what is the lifespan of such an asset that will allow me to classify as current or non-current, and some other things like that. All of this is what brought about IAS 41, which attempts to improve on the accounting treatment for agricultural activities, and therefore harmonizes most of those contentious issues across jurisdictions, as the case may be. Okay, and that is that. Now, what's going to happen now is, let us now define critical terms that we have used in the start of this section. It's critical for us to understand those terminologies, so otherwise you might get it wrong. Now, when we talk about agricultural activity, what are we talking about? We are talking about the entire management of an activity by an entity that involves biological transformation and harvest of biological assets, either for sale or for further production into agricultural produce or into additional biological assets. And we're going to look at it in practical terms. We have seen that all what I discussed earlier on, trying to bring up practical examples, demonstrate that all what we are involved in are agricultural activities. Any form of management activity engaged by an entity that involves the process of biological transformation, which I mentioned earlier, growth, procreation, production, degeneration, and all sorts of things, either to provide that biological asset for sale or to convert it into an agricultural produce or further into development of other biological assets. We say such entails an agricultural activity. Now, we also mentioned agricultural produce. Agricultural produce are simply the harvested biological asset of an entity, which means at the point you harvest a biological asset, at that point it becomes an agricultural produce. Now, a biological asset can either be a living plant or a living animal, as I've earlier said. Okay, you know what a living thing is. Okay, the only exception to biological asset as a living thing is human being, because I don't think any law anywhere in the world treats human being as an asset that can be consumed, sold, or otherwise. Except for that, every other living plant and animals are biological assets for the purpose of accounting. Therefore, human being is excluded in this case. Now, but within living plants, we have what we call burial plants. I repeat, within living plants, we have what we call burial plants. What are burial plants? Before I look at the terminology used by the standard, burial plants are simply plants, trees that they take substantial period of time to develop, probably, if not substantial time. The development process is such that upon maturity, they start to bear fruits. And they are expected to bear fruit for a period that is far more than 1 year, which means they bear fruit over a period of time beyond a year. A simple example of such plant, or how I could characterize such plants, are cash crops. Okay, cash crops are things like cashew trees, like plantain trees, or if they don't call it trees, like different, what's it called, cash crop trees, whereby they produce agricultural produce that are harvested over a long period of time that spans for more than 1 year, up to 5, 10, 15, 20 years, as the case may be. And therefore, those are what we call the burial plants. And when you hear burial plant, just think of cash crops. That is, look at trees by nature that bears fruits over a long period of time. The standard identifies a burial plant as a living plant that has satisfied 3 conditions. The first condition is that the plant is such that it will be used in the production or supply of agricultural produce, which means it bears fruits. And it is that fruit that you harvest. 2, is expected to bear produce for more than 1 period, which means it's not a tree that bears fruit for just a period less than 12 months, but it's something that bears fruit over a long period that spans more than 1 accounting period. Another thing we need to know about it, which is a third condition, is that as a remote likelihood of being sold as agricultural produce except for incidental scrap sales. What it means is this: such a tree that bears fruits will not be sold, or there is no intention to sell it at any point in time. Rather, the intention is for that tree to bear fruit over its useful life, so that it's only when it has gotten to the last stage of its useful life that it can no longer bear fruit in that commercial quantity without wasting its land, space, and other costs incidental to it. And such, it will be felled and sold or used in other things. Do you understand? What it means is that it's not a tree you plant with the sole purpose of cutting or selling the way it is. Rather, it is a tree that is planted, nurtured, cultivated to a level where it starts to bear fruit that is harvested as an agricultural produce. The other one is biological transformation. And we have said earlier, biological transformation entails any form of process within an agricultural activity that entails growth, degeneration, production, and procreation that cause qualitative and quantitative changes in biological assets. And what are qualitative and quantitative changes? Quantitative changes means that you increase the number. Qualitative changes is that it grows in size, okay, and in maturity. Now the next one is a group of biological assets. Now a group of biological assets follows materiality concept, whereby similar assets, which in this case, similar living animals or plants, can be grouped collectively as a car-generating unit or as a whole. Okay, for example, if you have a poultry farm where you have a day-old chickens or chicks, or I don't know what you call them, and you aggregate them together, you understand? That's what we call a group of biological assets. And harvest entails when you try to detach a form of product away from a biological asset, or a biological asset has reached end of its useful life. And as a result of that, it needs to be killed, sold outrightly. At that point, we call that process the process of harvest. And harvest brings about recognition and identification of agricultural produce. Any question on this? Any question on this? Okay, now let's look at key other definitions of the standard. Biological, transformation, management, and produce. What does that mean? Okay, Akifolarin, can you help us to look at what it means from the angle of the standard?
Okay. So other key parts of the definition, biological. This means agriculture relates to life phenomenon, living animals and plants with an innate capacity of biological transformation, which are dependent upon a combination of natural resources, for example, sunlight, water. Now that transformation Transformation, agriculture involves physical transformation, whereby animals and plants undergo a change in biological quantity, that is the fat cover, density, etc., or quantity. For example, lightweight or progeny over time, which is measured and monitored increasingly objectively as part of management control. So now management management means conditions are stabilized or enhanced. One, the transparency of the relationship between inputs and outputs is determined by the degree of control, that is intensive versus extensive. Three, it is different from exploration through extraction, where no attempt is made to facilitate the transformation. Four, biological assets are managed in groups of plant or animal classes, using individual assets to ensure the sustainability of the group. Five, sustainability of an agricultural activity is a function of quantity and quality. Produce now. Agricultural produce is diverse and may require further processing before ultimate consumption. Harvest. IAS 41 only applies to the point of harvest and not to any further transformations or processes that occur after that point. For example, in the case of dairy farming, cows are Please, can you return it?
Okay.
So, in the case of dairy farming, cows are biological assets from which milk is harvested as the agricultural produce, all of which would be accounted for under IAS 41. Any further processing after the milk is harvested, for example, by turning the milk into cheese, would be considered outside the scope of IAS 41.
Thank you very much. Thank you very much. Okay, now let's look at one or two things here. Okay, let's look at one or two things. Let's look at biological assets in its real sense. Let's break it down into the impact it may have. Now look at the nature of biological assets. Now, look at the first attribute to it, is that biological assets are core income producing assets within an agricultural activity. Now, one of those key things also is that it is held for their transformative capabilities. And remember, their transformative capabilities may include growth, degeneration, may include production and procreation. Now, growth means increase. Degeneration means what? Decrease. In units, which is quantity, or in size, which is quality. And therefore, we say that is what? Asset changes. And it could be a creation of new assets. New asset means it produces, therefore by giving birth. Sorry, procreation is by giving birth. Let me bring it down. While production is by producing non-living items, such as laying eggs for a poultry farming. Okay, you can see this now. Now, we must understand this biological transformation as a process because it affects our accounting, and we're going to see it in one of our methodologies. Now, one of those key things also is that we can distinguish them between the importance of this by saying that an asset changes are critical to flow of future economic benefits, yes, but both in and beyond the current period. But the relative importance of new asset creation will depend on the purpose of the agricultural activity, and we're going to see that as a mover. Now, IAS 41 distinguishing between two broad categories of agricultural production system, which means we have two agricultural production systems. One is the one that is consumed by way of harvesting, and there's the one that is barely consumed, okay, but are animals or plants that bear produce for what? Harvest. Now, for example, the poultry farm I have might be for broilers. And broilers are consumable because they don't produce anything other than to make them available for harvest, which means for sale. But if it is layers, broilers. But if it is layers, layers more or less are bare in nature. Which are for laying eggs. We call them layers. And those ones will be seen as bearer, which means animal or plant that bear produce for harvest. That means the produce they bear for harvest is laying of eggs. But broilers are consumable because they only are produced solely for the purpose of selling or consumption or for production into further usage. Now, another thing we need to also take note of is that biological assets are usually managed in groups of animal or plants. For example, if you go into catfish poultry, you know that it might start with 1,000, but evidence will tell you that probably by the time they grow over time, some die in the process, eat themselves, and by the time they will now turn to a bigger catfish, probably they'll be coming out in 600. Therefore, in that case, you don't account for them one by one. Rather, you account for them as a group of biological assets. Unlike some other biological assets that you can account for one by one because of the nature of those items, their size, their materiality, and etc. Okay. Another thing is that you can group them also by way of characteristics of male and female because they have different value and contribution in the whole process of the biological transformation process. Okay. Other thing also is that land often form part of integral part of agricultural activity. Okay, but again, we are going to see where land will not be accounted for as a biological asset. Rather, it will be accounted for separately in line with IAS 16 or IAS 40, as the case may be, which are one of the exceptions, as you have seen in the scoping out in the standard. Okay, any other question at this point? Now we'll talk about burial plants. Who can remind me what a burial plant is?
A burial plant is that plant.
Give me an example of a burial plant.
That is maintained for the production of reproduction over its useful life.
Okay, can you give me a practical example of a burial plant?
Cashew tree, have a cashew plant.
Okay.
Cocoa.
Okay.
And palm tree.
Okay, palm tree. Palm tree is also a very good example, which kept my mind earlier on. Palm tree. Okay. Now, a burial plant are excluded from IAS 41 because if you remember our discussion in IAS 16, we said burial plant is an item recognized as property, plant, and equipment. And the essence of it is that by nature, they qualify as PPE because they are used in further production process, like any item of PPE. If you go back to the definition under IAS 16, what PPE is, you'll find out vividly that a burial plant cannot be characterized as a biological asset or an agricultural produce other than being seen as an item of property, plant, and equipment. Now, in this case, we can see burial plants as grown trees in a plantation such that it may involve grapevines, rubber trees, oil palms, and etc. And these plants are used solely to grow produce crops, which we call cash crops, over a period of time, usually more than a year, and are not in themselves consumed. That's why we said earlier that they are not meant for consumption. Their consumption or sale might not be far-fetched from the fact that they have outlived their useful life and they need to be pulled down. And that's only when they can be scrapped, okay? When no longer productive, they are usually scrapped, and that is the critical aspect of it. A burial plant should be accounted for under IAS 16, as I've said earlier, and they are to be measured at accumulated cost until maturity and then be subjected to depreciation and impairment. What it simply means is this: every cost in nurturing, in developing a burial plant, a cocoa tree, a plantation tree, a vine grape tree, and all sorts of things, you will continue to aggregate the cost. What it means is you capitalize the cost up to the point it starts to bear fruit. Up to the point it starts to bear fruit is the point of maturity. And subsequently, under IAS 16, having accounted for it at cost, you start to depreciate it over its estimated useful life, and equally subjected to impairment assessment in line with IAS 36. And one thing you also need to take into consideration is that IAS 16 applies to it, and you could decide to use the cost model or the valuation model subsequent to acquisition or subsequent to the point you have recognized as an item of PPE. And in that case, you are going to apply the sole requirement of IAS 16 to it. peradventure, it starts to bear fruit. The fruit harvested at the point of harvest constitute agricultural produce, and such will be accounted for under IAS 41. Okay, but once it converts to inventory, it starts to account for under IAS 2. Now, let us go back to where we started from, where I developed a table for you guys. Now, let's look at the summary of it. Biological assets will surely be accounted for under IAS 41, which you can see here. Agricultural produce also will be accounted for under IAS 41, which you can see here. But inventory will be accounted for under IAS 2. What is the difference? The difference is that both biological assets and agricultural produce will always be measured at the fair value less cost of disposal or less cost to sell, as the case may be. Whereas inventory under IAS 2 will be measured at the lower of cost and the net realizable value. Can you see the difference? Which means anything you constitute as biological assets or as an agricultural produce, which is at the point of harvest, will always be measured at fair value less cost of disposal. But if it constitutes an inventory, thereafter, it will be measured at the lower of cost and net realizable value, in line with the discussion we've had under IAS 2. Does that make sense now? Is it making more sense to you? Is it making more sense to us now?
Yes, yes.
Yes, sir.
Okay. Okay, now let me try and give us some clues about what I want us to know. Now, I want to give you some summaries about it, about what I've just discussed. Now, at recognition, biological assets are recognized agricultural produce are recognized at fair value, less cost to sell, which is simply as cost of disposal, as the case may be. Okay, and that's what I've explained to you here. Okay, now we know what fair value is in line with Ifrs 13 as a price that will be received to sell an asset, which is in this case, or the price you will have to pay in transferring a liability between market participants in an orderly transaction at a measurement date. Now that's our fair value, and we have discussed various hierarchy of fair value from first level to second to third. Okay, and the highest level of fair value is the market value, unadjusted market value in an active market. Okay, now that is the fair value. But what is our cost to sell? or cost of disposal. Okay. Any incidental cost you are going to incur to sell such an asset may include general incidental cost. They include commission you have to pay to agent, third party, middleman, and all sorts of things. And transaction taxes, which are majorly levies to government or government agencies, other than income taxes. Remember, these are transaction taxes such as transfer tax, this tax, and also levies you pay. You know, for example, local government will have this like slaughter levy, acting levy, all sorts of stuff. Those ones are what you call transaction taxes or transfer taxes. Okay, before now, you also consider as part of cost to sell transportation. Okay, okay, now you also now consider transportation cost. Okay, I think I omitted that. Let me put that. Before now, there was no transportation cost, but now we now have transportation cost. That is, transportation costs incidental to taking it to where it can be sold will also be considered as part of it. But prior to now, before the revised position of IAS 41, transportation cost is not considered. Okay, that is that. Let's take note. Now, we have activities that are excluded from biological assets under IAS 41. One of it is farmland. Farmland may include, you know, the farm you are cultivating on, probably you bought it. If you have bought that land itself contributes to agricultural activity, but will not be considered as a biological asset. Therefore, that farmland, or even when you have a game park, a game reserve, a zoo, and etc., all of those will be accounted for under IAS 16 as a PPE. Okay, farm animals. When I say farm animals here are for recreation activities, not farm animals that are meant for procreation, production. But these are for what? Recreation, because they are associated with game reserves or parks. For example, you know, in Nigeria, we have not seen agriculture as something substantial. If I'm not wrong, I learned that agriculture accounts for close to 60 or 75% of the mainstay of economy of the United States. When I say agriculture, both agriculture and its value chain, agro-allied processing and every of the value chain account for the mainstay of the economy. And you find out that when you go into farmlands there, you can see things like game reserve, game parks, recreational activities that is done in order to fulfill living and the essence of life beyond just work. And such are not part of biological asset for the sole purpose of agricultural activities. Rather, they are more or less like seen as things that could make more or less like that could make things lively, that could make them see that they are working and they are also having leisure and some other activities in order to fulfill the essence of life. And in that situation, such activity involving farm animals, such as having donkeys, having horses for raising, having some other farm animals that is not meant for production, procreation, degeneration, or anything other than for the sole purpose of using them for games, activities, relays, and some other things. All of those are also not going to be classified under IAS 40. Rather, they will be seen as an item of PPE. And lastly, burial plants. Burial plants by nature, though, are biological assets, but because of more of their substance is involved in ultimate production, similar to what PPE will have done, by way of usage, they are more or less scoped out of IAS 41 and are treated as an item of PPE. If that is the case, I'll give us this question to answer. Okay. This is a question. Can somebody read the question? And I want a suggested solution from you guys.
Okay, I read it in level 1. Freeponomics Farms Limited has the following information regarding its plantation farm. Freestanding trees, 2 million. The land, occupied farmland, 800,000. Constructed road path within the farmland, 400,000. Animal related to recreational activities and game reserves, 500,000. Please expand. Okay. Then we have bearer plants, cash crop trees, 2.3 million. Then bearer animals, 3.1 million. Required, what is the total amount that should be accounted for as biological asset under IAS 41?
Okay. Okay, who will answer? Your answer is to tell me, is it a biological asset under IAS 41? Each one, let us pick it one by one. Now, before you pick it, let me explain what a freestanding tree is. A freestanding tree okay. Can you read it out, what a freestanding tree is, so that you can understand what I mean by freestanding tree?
Freestanding tree is the definition.
Is standalone or on its own foundation tree of support or attachment.
How to use.
Therefore, who will answer it?
I would say it's a biological weapon.
Biological assets.
Oh, sorry, biological asset, sorry.
That's freelance trees. Freestanding trees.
Okay. Now, is it a biological asset?
Yes.
I said yes, the biological asset.
Yes.
Yes, I agree.
Okay. The land, the occupied farmland, is it a biological asset?
No.
No, it's not.
Constructed road paths.
No, sir.
No.
No.
Animal related to recreational activity and game reserves.
No. No.
Why no?
Because it's used purposely for game.
No,
Okay.
under
Plants.
Said under IAS 16.
bearer plants, no.
Bearer plant, no.
Why?
Bearer plants, because they bear fruit throughout their lifetime and is accounted for under IAS 16.
Bearer animals.
Yes. Animal, yes.
No.
Animal different from animal related to recreational activities?
No. Bearer animal. No.
Okay, what is a bearer?
They are animals for game.
No, bare animal are animals that are meant for production of other.
Okay, of other.
For procreation. You have to procreate.
Okay.
Like when you have a farm or land for rabbits, it will create more rabbits. You get to more rabbits. Hence, okay, that is yes. Which means
Yes.
in this case, now say
There are animals.
Naira.
Animals. Sorry.
What's their nature? Nature or class of biological assets under IAS 41. Now be careful that not that they are not biological assets in some activities other than like land, but because of they are scoped out of the standard. Why? Because by their nature, they much more tilt towards being recognized as an item of PPE. You can feel now, rather than an item that meets more of biological transformation. I remember biological transformation are for growth, procreation, production, and degeneration. Okay, now what are they? I just link them. And this. All in all, what do I have? Do we all agree to this?
I agree to that.
Yeah.
Yes, sir. Agree.
We have understanding of it clearly. Okay, another question. Who read this? And I want somebody to profess solution to it.
Okay, I read. Scenario 2, green finance farms cultivate a cocoa farm and produces coffee. The company is, I'm reading. I don't know if you are listening.
Yeah.
The company is in the process of carrying out evaluation of its harvested coffee beans. One of the industry practices is to value coffee beans at market value through references obtained from a local valuation report. As at 31st December 2019, the company had harvested coffee beans costing 5 million, but the fair value less cost to sell as obtained from local valuation report for the same period, i.e. at the point of harvest, was 5.2 million. The harvested coffee beans were still on hand as at 31st December 2020 due to long aging and maturation processes after harvest. As at this date, the net realizable value stood at 5.12 million, while the fair value less cost to sell stood at 5.3 million. Required, what is the measurement of the coffee beans inventory as at 31st December 2019? 2, what is the measurement of the coffee beans inventory at 31st December 2020?
Answer that. Look at it carefully with respect to all what we have discussed today.
So let me make an attempt here. So the first part says, what is the value of the coffee beans as at 31st December 2019? So what I realized is as at 31st December 2019, the coffee beans was still an agricultural produce. So in that case, being an agricultural produce, the standard expects us to measure it at fair value less cost to sell. From the question, we already have a fair value less cost to sell from survey from a local farmer. So I think that will be the answer to which is 5.2 million. So I think that will be the answer to question 1. While question 2, at 31st December 2020, it is already as the nature has changed to being an inventory, I think. And for an inventory, it is expected to be measured at lower of cost and net realizable value. So in that case, I can see that the net realizable value of 5.12 million will be adopted in this case, but lower of cost. But cost is 5 million, so sorry. So we can take the cost, which is 5 million, to measure it as of December 2020.
Any other contribution? Any other contribution? Any other contribution? Madam Grace, what's your view? We can't hear you.
I agree with him. I agree with him.
Okay, if you agree with him, what then is a suggested solution?
5 million. That's costs.
Costs.
Yes. Less costs or net realizable value. That's number 2. The item has become the coffee was then an inventory. So, and it should be taken care of under IAS 16. IAS, what is it? It should be taken care under inventory. So, and it should be recognized less cost or net realizable value. And the cost is 5 million, while net realizable value is 5.12 million. So we recognize it at 5 million. Then for number 1, I'm okay with the solutions. I agree with him.
Now let's look at it. As at 31st December 2019, is it a biological asset? Is it agricultural produce, or is it an inventory? What is it?
It's an agricultural produce as at December 2019.
Agricultural produce.
Yeah.
And it should be accounted for.
Harvested under IAS.
Yes, it has been harvested.
And it should be accounted for at fair value, Abby?
Yes.
Less cost to sell.
Yes, sir.
Less cost of disposal, Abby?
Less cost. Less cost to sell, yeah. Cost of disposal.
Which is how much?
That's 5.2.
5.2. Okay. Okay. Now, as at today, a year after, it remains.
Excuse me, sir. It seems you are writing something, but we can't see your screen.
Okay. Sorry. Can you see it now?
Yeah.
Okay. As at today, 31st of March, December 2020, it is what? It's now an inventory, are we?
Inventory.
Okay. In that case, it will be valued at lower of and net realizable what? Value. Now, what was the cost? Okay, the cost is the fair value less cost to sell as at harvest, which is how much? As at harvest is 5.2. Now the net realizable value as of today is how much? 5.12.
12.
Therefore, what is the lower? Then what is the answer? What is the lower? The minimum between 5.2 and 5.12. Which one is lower? Did you get it right? You missed it. Do you know why you missed it? Do you know why you missed it? Who can tell me why you missed it? Because you failed to recognize that the cost is at the point it became inventory, which is after harvest, it was 5.2. That's the amount to recognize it as inventory. Thereafter, the new valuation is now 5.12. Therefore, 5.12 we compare with 5.2 to arrive at what? 5.12. Does that make sense? Does that make sense now? Okay, let me go and copy the answer there. That's scenario 2. Any question? Now let's look at the summaries of what we have done so far. Madam, can you read this? Recognition of biological assets.
Okay, sir. Recognition of biological assets. The recognition criteria are very similar to those for other assets in that animals or plants should be recognized as assets in the following circumstances. A, the entity controls the asset as a result of past events. B, it is probable that the future economic benefits associated with the asset will flow to the entity. C, the fair value or cost of the assets to the entity can be measured reliably. IAS 41, paragraph 10. The significant physical attributes of biological assets can be measured using various methods, which are used by markets to measure value and generally indicate the source of future economic benefits. The certainty of the flow of rewards can be determined by former ownership records, e.g., land title, branding. The availability of both cost and value for biological assets indicates the reliability aspect of the measurement criteria is fulfilled.
Okay, how do you measure biological assets? Can you continue?
Okay. Okay. Measure of biological assets. IAS 41 requires that at each year end, all biological assets should be measured at fair value less cost to sell. IAS 41 allows an alternative method of valuation if a fair value cannot be determined because market determined prices or values are not available. Then the biological assets can be measured at cost less accumulated depreciation and impairment losses. The alternative basis is only allowed on initial recognition. The measurement basis used to depict the fair value of a biological asset will differ depending on the existence of an active market efficiency, and the use made of the asset. In summary, it is felt that fair value, when compared to historical cost, has greater relevance, reliability, comparability, and understandability as a measure of future economic benefits. Should I continue, sir?
Yes.
Measuring fair value. The standard states that the primary indicator of fair value should be net market value. This is reasonable as efficient markets exist for most biological assets in most locations, and net market value is usually considered as providing the best evidence of fair value where an active market exists. Markets will generally differentiate between differing qualities and quantities. Market value is not generally predicted on management's intended use, however, but recognizes alternative uses. IFRS 13, fair value measurement, requires that fair value of a biological asset to be determined by reference to the principal market for the assets. This may or may not be the most favorable market. An active and efficient market may not be available for a class of biological assets in a specific location, or there may be imperfections in the market. The standard goes into some detail about how fair value should be measured in such circumstances. But in summary, the valuation techniques should be consistent with the objectives of measuring fair value and should attain an appropriate balance between relevance and reliability.
How do you recognize a biological asset in the balance sheet once again? Akin Falarin, can you take it up from there? Recognition in your balance sheets.
A moment, sir. My screen is okay. So recognition now. I believe you can hear me. In the statement of financial position, the biological asset must be shown at fair value less cost to sell, incorporating the consequences of all biological transformations. A gain or loss arising on initial recognition of a biological asset at fair value less cost to sell from a change in fair values less cost to sell is included in profit or loss in the period in which it arises. Okay. Changes to fair value can arise due to both physical changes in the asset and price changes in the market. Entities are encouraged to make separate disclosure of those two elements in order to facilitate performance appraisal. There are exceptions to this approach in certain situations. For example, in some agricultural systems, the predominant activity has a production cycle of less than a year, e.g., for example, broilers, chicken, mushroom growing, cereal crops. In such cases, the total change in carrying amount is reported in the profit or loss as a single item of income or expenses.
Okay, now let's look at this exercise. Can we attempt it? Can somebody read the question?
Okay, scenario 3. Farayola Agric Co. is a reputable poultry farm where it raises nature and sells livestock. The following are relevant information extracted from its accounting records. Carrying amount as of January 1st, 2020 is 2 million. Additions arising from purchases, 800,000. Gains arising from changes in fair value, less cost to sell, attributable to price changes, 400,000. Gains arising in fair value, less cost to sell, attributable to physical changes, stands at 500,000. Decrease due to sales, 780, and decrease due to harvest, 330. You are required. Okay, required. What is the carrying amount of the biological asset as at December 2020?
Okay. Who will attempt that? Look at it critically.
What is the carrying amount? Okay, so I'd like to attempt it one by one. First, carrying amount as at 31st January 2012 stands at 2 million. Additions now. In addition, purchases for the year, 800,000, that is an addition. Gains arising from changes in fair value, less cost to sell. In this case, the standard requires that it should be charged to profit or loss. Gains arising from changes, less fair cost to sell. The standard requires that it should be charged to profit or loss. So I think both the 400,000 and 500,000 will be charged to profit or loss. Also, decrease due to sales, 780. I really don't have an idea of the treatment for that. So I think the carrying amount as at December 2020 will stand at 2.8 million.
Okay, Madam Grace. We can't hear you, Madam Grace. You are muted.
Yeah, I said, I don't really understand what they mean in the question by decrease due to sales, decrease due to harvest. I don't really understand. So
it means that they sold some of the biological assets, and decrease due to harvest is that they harvested some of them by way of using other further production of goods and items. Remember what we have discussed so far here?
Yeah.
Let me show you back our discussion here. I remember?
Yeah.
Asset transformation process follows asset changes, growth, degeneration.
Okay.
Part of the degeneration is decrease in quantity.
Oh,
Okay, and that is it.
I was offline when you treated this place. So.
Let me put it to you guys simply. What has happened here is very simple. The first 4 items brings about increase in the value of that biological asset. 1, the balance we carry forward from last year, plus additions, new biological assets you bought. Let me say you bought additional animals. Gain arising from fair value attributed to price changes. We are going to treat that. What is price changes? It's changes based on the fact that by growth, you understand, more or less the price of selling a year-old cow is not simply of selling a 2-year-old cow, because you will have developed in physical size and the price will vary. Okay, and another variation is that market factors will vary the price based on inflation and etc. Physical changes, there are additions and growth in sizes. Addition means that you've given birth to new, you bought new and new assets and etc. All of this will bring about increase. Okay, the sum of increase they brought about is how much? It's 3.7 in total. Okay, but this 3.7 is before deducting what will no longer exist. Okay. So I have to convert it to decimal. Okay.
Excuse me, quick one, sir. I thought I read it somewhere just now that those gains arising from the changes will be charged to profit or loss account.
Okay, we are coming to that.
Okay.
We are coming to that. Now these are current amounts. These are carrying amounts for the biological assets as at 31st December 20. Now, the issue you need to ask yourself is this. Changes that occur in terms of increase in the fair value will either be internally or externally. Internally is usually attributed to price changes. Okay, and what are they? The fair value has changed, and therefore, as you are recognizing increase in assets, a corresponding entry goes as income in profit or loss. That's what you are talking about. But anything that is externally, other than from bets, which means you purchase additional, what's it called, biological assets, it will be balance sheet item. Cash will decrease and biological assets will increase. Any other thing other than purchases that brought about increase will impact profit or loss, whether as an expense or as an income for the corresponding entry to affect the biological assets. Does that make sense to you? Does it make sense to you?
Yeah. Thank you, sir.
Okay, now the simple thing we are requesting for is what I've shown you. Just to find what increases the value of your biological asset and what decreases it will give you your carrying amount as at the end of the day. Okay, now let me take you back to okay, let me put it somewhere here. Okay, now let's get to presentation. Can somebody take us through? How do you present and disclose biological assets in your financial statements?
Presentation and disclosure. In the presentation of financial position, biological assets should be classified as a separate class of assets, falling under neither the current or non-current classification. This reflects the view of such assets as having an undiluted life on a collective basis. It is the total exposure of the entity to this type of asset that is important. Biological assets should also be subclassified, either in the statement of financial position or as a note to the financial statements. That is, A should be subclassified in class of animal or plants, nature of activities, if it is consumable or bearer, and 3, maturity or immaturity for intended purposes. Where activities are consumable, the maturity criterion will be attained of harvestable specifications, whereas in bearer activities, it will be attainment of sufficient maturity to sustain economic harvest. Can I touch on the agricultural produce?
No, let's deliberate on this. What we are saying that in the balance sheets, though we have to take it as a separate class, and what we are going to ensure we do as a separate class is that it should stand alone, not necessarily current or non-current. But in practice, what we try to do is that we take it as a standalone, but we try to show it as current and non-current portion, which means we have current portion and non-current portion. What it simply means is that we look at various attributes, such as maturity. This factor is critical, mostly in determining which portion can be classified as current, which portion can be classified as non-current. Okay, because naturally, apart from non-current assets that is held for sale, the other two classes known to classification within the statement of financial position or balance sheets are the current and non-current. Okay, which means we might find it difficult to place it separately outside those two. And that's why in practice, what we try to do is to have it both in current and non-current, but similar to what we have as lease receivable and lease payable, where we'll have to find what is the current portion and what is non-current portion. Now, for example, the nature of the activity also matters, or the nature of the biological asset. What does that mean? For example, if you talk about poultry, like chicken, the lifespan of a chicken might not be more than 2 years or 1 year plus or 1 year and etc. Therefore, most of such bearer animal, in that case, will fall under current portion. But when we talk about other animals like cows, they could live as much as 2, 3, 4 years, probably, or depending on the nature of the plant or animal. Therefore, in that situation, they will fall much more under what? Non-current portion. Okay, and that is that. Does that make sense to us now? Okay, can somebody now discuss on agricultural produce? Remember, we have discussed as agricultural produce is the harvested biological assets, which is recognized at the point of harvest. Okay, over to you, agricultural produce.
Agricultural produce. This was defined in the key terms above. It is recognized at the point of harvest. Example, detached from the biological asset. Oh, that is detached from the biological asset. Agricultural produce is either incapable of biological process or such processes remain dormant. Recognition ends once the produce enters trading activities or production process within integrated agribusinesses. Although processing activities are incidental to agricultural activities and that do not materially alter the form of produce, that is drying or cleaning, example, drying or cleaning, are not counted as processing. Following harvest, the provisions of IAS 2 apply.
Apply because it has become or it has metamorphosed into a full-fledged inventory. Now let's look at measurement and presentation, as we discussed here.
Following the treatment of biological assets above, IAS 41 states that agricultural produce should be measured at each reporting date at fair value less cost to sell, to the extent that it is sourced from an entity's biological assets, which also valued at fair value. This is logical when you consider that until harvest, the agricultural produce was valued at fair value anyway as part of the biological assets. The change in the carry amount of the agricultural produce held at 2 reporting dates should be recognized as income or expense in the profit or loss. This will be rare as such produce is unusually sold or processed within a short time, so that the produce held over 2 reporting dates is being held for a specific management purpose, and the consequences of that should be reflected in the current period. Agricultural produce that is harvested for trading or processing activity within integrated agricultural or agribusiness operations should be measured at fair value at the date of harvest, and this amount is deemed cost for application of IAS 2 to consequential inventories.
Okay, now let's look at presentation in your financial statement.
Presentation in the financial statement now. agricultural produce should be classified as inventory in the financial statement, in the statement of financial position, and disclosed separately either in the statement of financial position or in the notes to the account.
Okay, now the standard provided us some guidance, which I'm going to share with us now, similar to the table I earlier provided. Okay, and it talks about how we can classify or identify biological assets from agricultural produce and also from other assets, which might constitute as inventory. Now let's look at the guidance provided by the standard. Now, can you see the examples? Can you pick them one by one? At the point it's a biological asset, at the point it becomes agricultural produce, at the point it becomes inventory.
Okay. Do you want me to read it out, sir?
Yes, sir.
Okay. So, biological asset, agricultural produce, and inventory. The first example here is a sheep. A sheep being a biological asset, the agricultural produce under sheep will be wool, and after processing, it becomes a yarn or carpet, that is as an inventory. Trees in a timber plantation, for example, agricultural produce under it will be felled trees, and when it becomes inventory, examples are logs or lumber. Dairy cattle now, the production will be milk, that is agricultural produce, and the end product as an inventory will be cheese. Pigs, for example, will be carcass, and as inventory will be sausages. Cotton plants as a biological asset under agricultural produce, it becomes harvested cotton and thread or clothing when it becomes inventory. Sugarcane, harvested cane and sugar as inventory. Tobacco plants, picked leaves, cured tobacco. Tea bushes, picked leaves, and tea under inventories. Grapevines become picked grapes under agricultural produce, and wine as inventory. Fruit trees become picked fruits and processed fruits when they become inventory. Oil palms, for example, the produce is picked fruit, and oil palms can as inventory when it is being sold. Rubber trees, for example, the agricultural produce is harvested latex, okay, and later it becomes rubber products as an inventory. Comment here. Some plants, for example, tea bushes, grapevines, or palm, or oil palms and rubber trees, usually meet the definition of bearer plants and are within the scope of IAS 16. However, the produce growing on bearer plants, for example, tea leaves, grapes, oil palm fruits, and latex is within the scope of IAS 41.
Okay, thank you very much. Thank you very much. Okay, that is that. Now, let's look at government grants. Remember, we have discussed government grant extensively with respect to IAS 20, okay? But there's an exception to what we didn't discuss, which relates to government grant relating to agricultural activity. That is within the scope of IAS 41. The essence is that under IAS 41, recognizing government grant on agricultural activities other than those that are to be recognized for items of PPE and the likes are accounted for in a straightforward manner, where they are accounted for as income once they become receivable. unlike the other approaches where we have to look at further conditions and some other things to see how we are going to recognize it. And that is a position of standard, which means an unconditional government grant related to biological asset measured at fair value less cost to sell should be recognized as income when and only when the grant becomes receivable. And that is what makes it more straightforward compared to what we have under IAS 20. And if a government grant requires an entity to engage in specified agricultural activity, example is the European Union sets aside grants for agri businesses. An entity should only recognize a grant as income when and only when the conditions are met, which means you don't recognize a grant over time, you recognize a grant at a point in time, either initially when there's no condition attached to it, or after when all of those conditions have been met. And that's why we say—
The internet is breaking up, sir.
Okay, can you hear me better now? Can you hear me better now?
Yes, it's fine. The internet is not okay.
Okay, probably at your side because it's not showing that here, but let me repeat myself. I said the grants relating to agricultural activity varies in two perspectives. First one is unconditional grant and second one is conditional grant. When you have unconditional grant, you recognize a grant immediately only when it is receivable. Okay, when it becomes receivable as a grant, you recognize as an income. But if it's a conditional grant is a grant where you have certain conditions you need to meet in the immediate future. You don't recognize such a grant even if you have received it, but rather you are going to recognize it as income only when those conditions have been met and the grant becomes receivable in that manner. Okay, and that is what I've explained earlier. IAS 20 does not apply to government grant on biological assets measured at fair value less cost to sell, but may apply on any other grant on agricultural activity that is not specifically related to biological assets measured at fair value less cost to sell. However, if a biological asset is measured at cost less accumulated depreciation and accumulated payment loss, then IAS 20 does apply. Okay, and that is what we need to take note of. Example might be a bearer plant. Okay, because it's outside the scope of IAS 41. Okay, that explains it all. Okay, now since we have had extensive discussion on this, there's a critical question that we now have to look at that more or less put a cap on all of what we have discussed so far. And this is the question. The question is very interesting. And let's see what happens. I want somebody to read this. You have to read it carefully and painstakingly so that we can have better grasp of it. If likely, you can take notes of anything relevant. Over to you.
Okay, scenario 4 now. Farasimi Dog Ventures Limited involves in the nurturing and rearing of special breeds of dogs. The company has 10 2-year-old dogs as at 1st of January 2020. A dog aged 2.5 years was purchased from another entity on July 1st, 2020 for $108,000, and one of the existing dogs gave birth to additional one on the same date. Okay. The following are relevant information obtained from the accounting books of the company for the year. 1, no animal were sold or disposed during the year. 2, the fair value less cost to sell unit as follows. 2-year-old dog on 1st of January 2020 is sold for $100,000. 2.5-year-old dog on July 1st is $108,000. Newborn dog as at 1st of July is $70,000. 2-year-old dog on 31st December 2020 is sold at 105 or is valued at 105. 2.5-year-old dog, 2.5-year-old dog on 31st December 2020 is valued at 111,000. Newborn dog at the end of the year is valued at 72,000. 3-year-old dog on 31st December 2020 is valued at 120,000. A half-year-old dog on 31st December 2020 is valued at $80,000. Required. A, what is the fair value of the biological asset as at 31st December 2020? 2, what amount of gain from changes in the fair value of biological assets should be recognized in the current year? C, what is the gain from changes in fair value due to price changes? And D, what is the gain from changes in fair value due to physical changes?
Okay. Now, let's look at the question. Let's take a few minutes to reflect on the question before we tend to answer it. Now, let's look at the solution now. The first thing is this. Let me try and explain the question. This venture is into nurturing and rearing of special breeds of dogs. Now, at the start of it, they had 10 units or 10 quantities of 2-year-old dogs at the beginning of the year. Now, during the year, sometimes in July, they bought a dog which is age 2.5 years. Okay, for $108,000. And thereafter, one of the existing dogs gave birth another dog. On the same day, we acquire a 2.5-year-old dog. Now, which means we have this year, as at the end of this year, 10 dogs at the beginning, 1 additional purchase, and 1 bet, which means we have 12 dogs at the end of the year. Now, from the accounting books of the company, kept by the accountant, we are able to extract relevant information. That 1, no animal was sold or disposed of during the year. That's why we still have 12, starting from 10, 1, 1. 2, that the fair value less cost to sell per unit of those dogs as follows. For a 2-year-old dog, as of 1st of January, the fair value is $100,000. For a 2.5-year-old dog, the fair value, as at the measurement date 1st of July 2020, was $108,000. For a newly born dog, on 1st of July 2020, the market value for such a dog is $70,000. As at end of the year, a 2-year-old dog is valued at $105,000. A 2.5-year-old dog, as at that reporting date, was valued at $111,000. A newly born dog, as at the end of the year, is valued at $72,000. A 3-year-old dog, as at the end of the year, is valued at $120,000. A 6-month-year-old dog, which is half a year, as at the end of the year, is valued at $8,000. Now the question is, what is the fair value of the biological assets? As at the end of the year. Now, the first thing we need to do is that as at the beginning of the year, I only have a 2-year-old dog. And they are 10 in number, which means the category of dog I have are 2-year-old, which are 10 in number in January 2020. But as at 31st December, they've grown to be how old? Who can tell me how old are they now?
3 years.
3 years, okay. Now I'll describe them now that they are 3-year-old dog. And the physical change date is that the 3-year-old dog as at today, which is 31st December. But these are existing dogs that I carried over from 4th of January 2020.
Yes.
Now, during the year, I purchased additional dog.
2.5 years. It should be 3 years.
That on 1st of July, I purchased that on 1st of what? July
2020.
1st of July 2020. Okay, and that is 2.5.
Yes. That's 108,000.
Year old.
Yes.
Okay. And again, I had a new bond also on that same date.
$70,000.
Now, a newborn, I'll say a day old. Have you?
Yeah.
Newborn. Excuse me, sir.
Yes.
Okay. For if we take cognizance of that, we are at 31st December 2020 now. The purchased dog will be 3 years, and the day old will be 6 months.
6 months. Yeah.
Okay. Now, what I'm saying? Okay, let me do it like this. Let me copy it here. Purchased dog at the age of. Let me put it like this.
2.5 years.
A day old. Does that make sense? So that as of now, it's now 3 years. And as at now, it is now what?
6 months.
6 months. 2.5 year old, which is 6 months. Okay? Now let me put it like that. Now, the question then is, we have to fair value them because they are biological assets as at the reporting date.
Yeah.
And these are the reporting date values. We'll now look at which one is appropriate here to value their current age. Ages as at
the beginning?
No, not as at the end.
At the end. No, at the end of the year.
It's at the end now. Can you remember?
Yeah, it's at the end of the year. We are at 1st December.
Now, what will be the fair value you are going to pick? Remember, all figures are in thousands. I'll convert it back to thousands. For a 3-year-old, what is relevant to me is what?
120.
Which is 120.
Times 10, that's 1.2 million.
This one is 3-year-old. It's the same 120.
Yeah. Only 6 months. That's 80.
And this is 6 months. It's what? 80. Because I'm valuing them based on their maturity at the reporting date. Therefore, what is my
1.2
units times fair value per unit? 1.2. And that. Does that make sense?
Yeah. Yes, sir.
Okay. That is that. Any question before I move further?
Good.
Okay. Now let's look at B. B says, what amount of gain from changes in fair value of biological assets should be recognized in the current year? What we are looking for is simply the difference between the fair value as at the reporting year, which is this 1.4 already.
18,000 to 18,000.
Let me put the arrow. This 1.4 is what we obtain from here. That's where the 1.4 is coming from. The difference between that 1.4 and the kind amount as at beginning. And what is beginning? I will explain.
1 million. Addition.
Okay, now to determine the beginning, I need step 1. Step 1 is that determine the kind amount as at the beginning. And this beginning is inclusive of the new additions via purchases. Now, let's look at it carefully. As at 1st of January of that year, I have 10 existing as at 1st of January 2020, and they are 2.5-year-old. Now, the beginning of those ones was 1st of January. But there's a new one that was not existing with me on 1st of January, but its own beginning starts from the day I purchased it, which is 1st of July 2020. This 2.5. If you remember, I purchased this 2.5-year-old dog. Okay, 1. Therefore, what is the beginning? The beginning for existing dog is the beginning of the year. Which is 100. This is the fair value.
1 million.
2 years old, Abby?
Yes. 2.5. No, it's 2 years. You put 2.
They were 2 years old, not 2.5.
Oh, they were 2 years.
2 years old. Therefore, our peak
1 million.
is 100. That was the fair value as at the beginning of the year, which was what was carried from last year, which is the same amount you have there. Therefore, the one I purchased it at a cost, which is its fair value then of how much? 108.
108.
Which is the same 108. Therefore, I come here, 108. Therefore, I'm not comparing how much it cost me
How much is
for this 11 as at the beginning, which is how much?
This is 200,000. That's 200. 1 million. This one is 108.
And that is it. Therefore, it means that the average value of those items was 1108. But the value today is 1.4. How much have I gained? 292. But there's something here. This is 12.
Yeah.
There's one missing. Where is the one coming from? The one is a new born by way of procreation. It's a gift to me. It comes at 0 cost to me.
Okay.
Which means if I put the cost here, it will be 0 because I didn't incur any cost in adding it, or like the one I purchased. Therefore, it's part of my total gain. Do you guys say now? Put yourself in the you rear rabbits, you rear dog, and you sell. Anything that comes by way of bets is a gift to you, which comes at 0 cost, even though it has a value. And that is that. Does that make sense now?
Yes, it does.
Yes, sir.
We have answered the second question. Now, there is now a problem. This fair value gain which is total in nature, can be attributed to 1, price changes because of inflation and some other things, and physical changes. Physical changes is because of new purchases you have made and new bets that has occurred.
Okay.
Price changes is attributed to market price changing. What was 2-year-old last year was $10,000. This year is $12,000 without even having a maturity period or anything. Just because you are on the same age, the market price has moved because to reflect inflation, purchasing power, and all sorts of things. And second changes is physical changes. Changes are attributed to the fact that you just bought new into your business. And 2, because they have also grew by way of size. Like somebody that is 1-year-old is 2-year-old now, the dog, the price will not be the same. And also for newborn, that is a gift to you. You start to create value, which is a form of gain. Therefore, how do we now attribute this 292 into price changes and physical changes?
Price changes, this is 1 million. That price changes is 200,000. Physical changes.
Now, what do we do? There's a 3-step approach to solving this. Okay, what I'll do now is, let me break this stuff and so I can pick it up. That's my view. And then on freeze. Okay, now see what I'll do. The first thing I told you is 3-step approach. The first thing that I need the current amount at the beginning, inclusive of changes, that is all additions now, whether additions by way of purchases or addition by bets. Second level is the fair value of the biological asset at the beginning age using remeasurement date fair value, which means the same dates, this and this, but using remeasurement date fair value, which is, we are going to see that. And lastly, the fair value less cost to sell, as we have initially reported it as at the end of the year. Now, I'll simply start from the last one because we've done it before to obtain what we have as at the end of the year. Now, we've done this before and we'll be seeing the 1.4 once again. Remember, this 1.4 is what we have here, this 1.4, which I can also still show another arrow that link it, that we are still saying the same thing. Can you see it? That is the same 1.4. Can you see it? Now, what have I done here? Is the existing are 10. I can put date there, existing as at 1st January 2020. Purchases. July 2020, and newborn. This is it. Now, but what is your current age now? Ages as at today. 3 years, and 0.5-year-old. Okay. What is the fair value? 120, remember, at this age, and 0.5 at this age as at the reporting date. And that's how we got that 1.4. Now I'll go to the first layer. The first layer, we've gotten it also before, which is, but the only difference is that we've gotten it before without considering the total changes. Let me put it here, total changes. But rather, we only look at changes with respect to addition, regarding changes with respect to procreation, which was BAT. Now, if you go back, you find out that this is what we had before. This is what we had before, 1108, which is this same 1108 here. Can you see it? Okay, but this does not include the newborn baby. But now we are going to include the newborn baby, because what we want to achieve is that we want to identify these 292. How do we separate price changes from physical changes? This. Therefore, what will I do? I'll bring in the additions that was as a result of procreation, which is BAT. And it then means that coming from BAT, it means it created a value of 70,000. Because at BAT, newborn dog, as at the time that BAT was given, was valued at 70,000. Therefore, the difference between this 178 and 1108 is just because of newborn. So let me put addition there. Let me put procreation instead of addition. You know, procreation comes by way of birth. Okay. Therefore, I'll come here, I'll put addition and procreation. Okay. Now, the next is that we are looking at this same beginning value. Okay. But we are looking at the fair value of it at a remeasurement date. What does that mean? Now we'll look at it from this angle. Look at what is our remeasurement date. Our remeasurement date is the reporting period. Let us assume there is no physical changes in that asset. There's no physical changes in those ones that in the dogs that we had, which were 2-year-old last year, as at 1st of January 2020. Let's assume that they are still 2-year-old as at December. They didn't grow. What will be their value if they don't grow as at the reporting date? It is 105. Have you?
Yeah.
Let's look at the one we newly acquired on 1st of July. Let's assume that it didn't grow. There's no physical changes. It then means that the value without physical changes is how much? 111.
111.
Let's assume that the newly born did not grow from birth. It just stayed there, no physical change, no growth. The age remained the same. Today, what is the value? If it's just born today, 72 at that age, 0 a day old, that's 72. Therefore, what will be the value? Which means we are measuring it in its own nature. And what we are trying to do is to be able to identify the price changes, keeping physical constants. Price varies, but physical age constants. That's what we are trying to do. Now, which means we are trying to carry out a price sensitivity analysis that, okay, how sensitive it is to changes in price, given that the age remains the same. And that's why we say the age remains the same as at 31st December 2020 by assumption. And that's how we have 105, 111, and 72. Now, which means the value, given the same physical nature, that is given the same age, between these, we'll find out that the difference between 1178 and 1233 is strictly attributed to what we call price changes. Attributed to what we call what? Price what?
Price changes. Price changes.
That's what I've done here. What is attributed is that the difference between 1178 and 1123 is price changes, keeping the physical nature constant. And that is what we have here, 55,000. The second changes is that the difference between the fair value, you know, the fair value is on the same date, measurement date, 31st December 2020. But the physical nature are different. This is what is different. Therefore, the difference between this second level and third level, let me call it levels. Yeah. And the third level, the difference between the second and the third level is the physical changes. And what is the physical changes? Is the difference between this 1.4 and 1223, which give me 167. But this 167 also still have an element of newborn. Remember, this newborn is a gift to us because it comes at a zero cost. And therefore, that gift must be considered along with this to produce our total gain arising from changes in physical nature. Does that make sense to us? Can you take time to look at it?
Yes, it makes sense, but I have not gotten something clearly. The newborn in this case does it not amount to double counting because it was already valued as at 31st December 2020. I mean, in considering the physical change.
Where was it valued in 2020? The 2020 valuation year, remember, we have looked at changes. At the end of the day, when you compare apple with apple, new addition was 72 before, now it is 80. The only portion you recognize is difference between 72 and 80, which is what? 8. 8 plus, do you can say now? I get what I'm saying now. Did you get what I'm saying? It's 8. You see how this 70 unaccounted for.
Okay.
Did you get it clearly now?
Yeah, I get.
Any other question? Any other question? Now,
Mr. Muyiwa, please, this 70, I'm still on that newborn. Why we are adding it back again? I know that you said.
Because first, look at it. What is here? This 167 is the difference between second level and third level.
Yes.
Now, I pay them one by one. What is the difference? If you have to put it one by one, let me try and put it somewhere here. For existing, now what are the differences? Let me put it side by side. Now, let's look at it. You find out that what you have only recognized in this 167 is just 8, yes, which is the movement between 72 and 80. You have not taken care of the initial free gift you got from birth. Did you get it?
Yeah, I do now.
It's not double counted. It's not in. Is it in there? No.
Yeah, no.
It's a marginal difference that you are accounting for here, not from grade 0. This one is as at the same measurement date. Remember this date?
Yes.
Which is different from the beginning, which is at the point of beginning for existing or date for addition or procreation. Do you get it, man?
Yes, sir. I'll listen to it.
Any other question? Any other question? Therefore, let's now, if there's no question, the sum of 55 and 237 account for this 292. Can you remember? The 292 is broken down into 55 for price changes and 237 for physical changes. Now, let me copy this to our notes and we'll wrap it up with disclosure requirements. Okay. That's the solution. Now, can we forge ahead on, okay, let me bring this also to it so that it can serve as further guidance. I'll just call this proof. Proof of this. Okay. Now let's look at disclosure requirements. What are we to disclose with respect to the standard? Who will volunteer?
Okay, let me go. Disclosures, general. An entity shall disclose the aggregate gain or loss arising during the current period on initial recognition of biological assets and agricultural produce, and from the change in fair value less cost to sell of biological assets. An entity shall provide a description of each group of biological assets. Additional disclosure for biological assets where fair value cannot be measured reliably. If an entity measures biological assets at their cost less any accumulated depreciation and any accumulated impairment losses, at the end of the period, the entity shall disclose for such biological assets. A description of the biological assets. B, an explanation of why fair value cannot be measured reliably. C, if possible, the range of estimates within which fair value is highly likely to lie. D, depreciation method used. E, the useful lives of the depreciation rates used. And F, the gross carrying amount and the accumulated depreciation, that is aggregated with accumulated impairment loss at the beginning and end of the period.
Okay, let's now look at additional disclosure with respect to government grants relating to biological assets measured at fair value through fair value less cost to sell. Okay, what do we disclose with respect to that? Okay, over to you.
Okay, for government grants now, an entity shall disclose the following related to agricultural activities covered by this standard. A, the nature and extent of government grants recognized in the financial statement. B, unfulfilled condition and other contingencies attaching to government grants. And C, significant decrease expected in the level of government grants.
Okay. Thank you very much. Any other question, and I want commentaries about whether your expectations have been met based on the fact that this is more or less new to most of us with respect to idea in practice or in theory. Any contribution as your objective as defined by you been achieved with this exposure?
Oh yes, thank you very much, sir. I feel
I think his network is down. Okay, who else?
Hello?
Yeah, we can hear you. Enaro.
Yes, I said I will have to go through it again because my network, my modem network went blank for almost 1 hour or thereabouts.
Okay.
So I had to, when it came up, I had to reconnect again. So I missed a substantial portion of it.
Okay. Madam
So
Grace?
I'll go through it again.
Madam Anne, are you there? Madam Grace, are you there? Okay. Now we'll bring this to the end, and you could also more or less explore further materials on this, and probably you also get financial statements of agricultural companies, especially those that are involved in farming activities and poultry, not those that are in the processing or agri-allied, but rather the agricultural activity itself from the starting point. Thank you very much, and God bless you on this.